So, since my initial experience trading meme stocks, GameStop and AMC, I traded those. I never really made any money. Obviously, I didn't really lose any money. I briefly got into United Wholesale Mortgage Company. That's kind of its own little story, but as of right now, I'm actually making money off it for the first time on some calls I bought when it was down probably around $7. Now it's up around 11 and it's still going up. It has a lot of upside potential, so hopefully I'll make some money off that in the next couple of days before they expire on the 18th. But what I have been making money off of that has really been my strongest conviction buy is oil. And the reason I believe so strongly in oil is because oil, I think, has a bright future over the next year to year and a half, 2 years. I don't know if it has a bright future in the long term, in the next 15 to 20 years, or even in the next 10 years, but I'd say within the next 5 years we're relatively safe. There are obviously a lot of different wild cards out there. There's a lot of different factors that come into play. A lot can change over the next 5 years, but definitely over the next year and a half, I'd say oil is a pretty solid play. I think that it has a lot more upside potential. So far, the oil sector has produced some of the biggest gains out of any sector, out of any commodity in 2021. To my knowledge, it might even be the sector that's produced the most gains. And I think a lot of the reason it's had such a high upside this year is because it had such a large downside last year. So to give a little bit of back history, in 2020, around March, when the bottom dropped out of the market, I think oil got hit harder than any other sector. And for sure, per capita, oil companies were going bankrupt a lot faster, and there was a larger volume of oil companies defaulting on loans and going bankrupt and filing for Chapter 7 and 11 than any other sector out there. So, and that affected me quite a bit too, because I was in North Dakota and that was my business. I was in the oil field service industry, so I was hauling fresh water to wells and I was hauling salt water off wells. So the wastewater, I was hauling them from these well sites they fracked in the Bakken, and I was hauling them to disposals. So my income was directly wrapped up in the production of oil in America. So when oil futures went down into the negatives, which I'm sure most people know, oil futures went down below negative 30. I think they somewhere in the mid negative 30s is where their all-time low, and that's never happened before. Oil futures have never gone into the negative. Basically, there was such a large surplus of oil and nobody wanted it because things were just shutting down overnight in March. They had more oil than they knew what to do with, and nobody wanted to take possession of the underlying asset that these oil futures contracts were claiming, right? Because when you buy an oil futures contract, you're agreeing to buy the underlying asset by the specified date. So they had all these barrels of oil, and they didn't have anyone that wanted to take possession of them, so people were paying to get out of these contracts, and that's why oil went into the negatives. Now, obviously, when you are in the business of producing a commodity that is worth now negative dollars, it's not great for business. And with shale in general, shale oil in the United States tends to be over leveraged. It tends to be something that hasn't made a lot of money historically. It tends to be something that is very, very cost intensive. So it takes a lot of cost up front to drill for oil. And then a lot of the profits that are made from the sale of the oil when the oil's produced, a lot of the profits made from the wells are just rolled into the next wells, and they're just continually rolling over profits and getting larger and larger chunks of land to drill on, and bigger contracts and bigger loans. And the price, as long as the price of oil's up, the banks will continue to loan money, and investors are have continued interest in investing in shale and oil in America. But as soon as the price of oil goes down, and especially if it goes negative, the bottom just falls out of it, and you have all these huge oil companies that have massive loans that they can't pay off, and then you see a whole ton of downside. And the market is cyclical in nature, so it has this constant up and down. It'll go up, and it'll go crazy, and people can't get enough, and then the bottom will just fall out. And it affects the oil service providers quite a bit, because you'll have more work than you can possibly handle in the Bakken. And then all of a sudden, a couple months to a year later, you just can't find a job, and the rates are garbage, and you can't make money almost. And a lot of people, end up bailing around that time. And there's a lot of consolidation that happens during these low points, these bust parts of the cycle. So we went through a bit of a boom, I believe, from about 2016, 17, 18, 19. It was beginning, the price of oil is going down quite a bit, but it's been pretty profitable since 2016. Let me look up the oil price so I can actually give a better analysis, just so I'm not just spitballing off the top of my head. So I'm looking at the oil chart right here, and I know it crashed sometime around 14. It went from, $100+ per barrel, and then it crashed down. So 16, it was like 50, 45, 50, 17, still kind of holding steady at 45, 50. Looks like in 18, it really started ramping up. We went up to 57, 60, 50, 60, 65. And then it looks like towards the middle to the end of 2018, it was trading all the way up to, that's 2017. So yeah, 2017, 2018 were really good. They were up in the $65, $70 range. It looks like it peaked for that kind of period right around $73 in September of 2018, and then it kind of took a dip, went down again to the 45 range, went up again to 63. So I would, if I were to make kind of just paint with a broad brush, I'd say you could make money in the oil services industry from pretty much 2016 on forward. But then between 2018 and 2019, things have been doing really well. 2019 definitely wasn't as good as 2018, but there's still money to be made. It looks like you're averaging in the $50, $60 range for oil, 55, 60. And then obviously at the end of 2019 and going into 2020, things just started doing really, really bad. They were already doing bad because China was experiencing lockdowns. It was affecting the price of oil because we weren't selling as much oil. And then in March and April of 2020, that's when things went negative, and it was just a crazy all-time low. Never been that low before. And since it's all-time low, it's been slowly making a comeback. So in a nutshell, oil jumps up and down. It's always jumping up and down. It's always either in a boom or a bust. Sometimes it trades flat for a bit. But the entire industry is highly cyclical just by nature. It's always going through a cycle. And this is no different. The only difference here is that because things were already kind of going into a little bit of a bust stage, I don't know what would have happened had the coronavirus not happened. Maybe oil would have, traded flat. Maybe it would have gone back up, could have gone down to like the 30s or 40s, and we would have had kind of an artificial bust. Or not artificial, but a natural kind of a bust phase where there wasn't a ton of money to be made, and you could still find work, but it's going to be cheap. But Corona just absolutely ripped the bottom out of it, sent it into territories, low negative territories that it has literally never been in historically ever, and really just shut down the entire oil industry. I mean, overnight, the whole town I lived in of Williston, I mean, people were just packing up and leaving. All my friends and family left. There were very few people left behind. Some people that were still there weren't even working. They just really didn't have anywhere else better to go, so they were sitting around for months, hoping eventually the work would come back. And because the brakes were just pumped on the oil industry as a whole, and these companies started experiencing bankruptcy, we had this massive downside all at once, and we had this massive surplus of oil that was being stockpiled everywhere, and wells were getting shut in, and wells that were being drilled were finished up and capped off, and no more wells were being drilled, and drilling rigs were being idled down and shut down and stored, and companies were laying off everybody. And it was a bigger downside than is historically, I guess, normal, because downsides are normal in the industry, but being completely shut down is not normal. What happened with everything being shut down, and this is kind of an interesting part of Shell, is Shell has, the way Shell works in a nutshell, without getting into the details, is when they're doing hydraulic fracturing and they're fracking wells, they'll go down and they'll frack a well, and that well will produce a shit ton for like the first 6 months to a year. It'll just produce a ton of oil, a ton of water, a ton of natural gas, but then they tend to taper off and they stop producing, after about a year. I don't know what the actual percentages are, but a lot of these things die off up to 50 or more percent. Their production dies off 50 or more percent in the first year. So you have all these wells, even the ones that are still in production and are still pumping, and they're just pumping less and less. And obviously we're not using a ton of oil, and we have this huge surplus, so it's not a big deal. We're not running out of oil just because we shut down. But as the months go by and we start slowly using up all our reserves, we start building this kind of case where we're heading towards a supply crunch, to where we can't just flip on the switch and start making the same amount of oil we were making at the end of 2019 and 2018. It takes a while to drill the wells and bring them online, and send the oil to refineries, and it takes a while to get the oil machine going again. On top of that, investors are really leery about investing in oil companies, or they have been for the last year or so, and obviously a lot of interest is coming back. I've been hearing little tidbits on the news about people wanting to invest in oil because they think that like me, it has a lot of upside potential to it. But in general, investors have been shying away from oil because politically it's not a great investment to be in, because everyone demonizes fossil fuels. And then historically, oil tends to pull out massive loans and over leverage and then go bust every few years, and then all this crazy money you made in your investment, you lose it. And so it's not really something you can buy and hold a lot of times, because if you buy and hold it over a long enough period of time, your likelihood of losing your money in that investment is relatively high, just because the nature of the oil industry, and also the political nature of them wanting to decrease fossil fuels as much as possible. And a lot of these nations and countries, and just worldwide, them passing a lot of governments passing a lot of policies that are restricting and stopping the exploration of oil. So now we're in this phase where everything's opening back up. Restrictions are being lifted on travel. Restrictions are being lifted on, social distancing, masks. There's a ton of vaccines being rolled out. No one's really, not no one, but a lot of people have stopped being afraid that they're going to get sick of coronavirus and die, and they want to get out and get back to work and start their business and start going back to life as normal. And so now we're increasing our oil consumption back to pre-pandemic levels, and we don't have the supply of oil that we had before. So now the opposite's happening, where we're entering a boom phase, and there's obviously factors that play into it. But because oil fell so hard and there was a lot of consolidation at the bottom where some companies went bankrupt and never came back, some companies went bankrupt like Oasis and Whiting, where they actually managed to deleverage quite a bit and they managed to shed a ton of debt, and now they're cash flow positive and they have money in the bank to fund further exploration. And it's a really good situation for them, and so now there's all this potential to make all this money, and the cost of oil is high per barrel because the demand has gone up significantly and the supply hasn't quite caught up with the demand yet, and it's going to be a while before the supply can catch up with the demand, because you can't just turn it back on immediately. So there's a lot of different factors that play into it, and realistically the point of this podcast isn't really to give people this really in-depth, knowledgeable, technical analysis of what's going on. These are just my opinions. These are based on the information that is filtering in through my brain that I'm actually managing to hang on to and build a thesis around. So some of these numbers might be a little bit off and people are going to have different opinions and perspectives, but this is just what's been working for me, and this is just my general thesis and my general story of what's going on. Is that oil has a lot of upside, and it's going to be a good play with a lot of these companies that just on a fundamental level have a lot of cash and have a high return for your investment over the short term. So there's opportunities to do what I'm doing, which is just flipping calls. So I'm pretty much leveraging my dollars, and instead of just buying, because I'll buy the underlying asset, I'll buy stocks in the oil company, but then I'll also buy calls whenever the stock price goes down to a level where I think that it's undervalued, or else I think it's going to go back up in the short term. I'll buy calls, and then as soon as that call doubles or triples in value, or sometimes it just goes up 50%, and then I'll sell it for if I buy $1,000 worth of calls and they go up 50%, well, I just made $500, so I'm not really complaining. But so I buy the oil stocks, and then I also flip calls on the ones that I believe in as they go down, and as they dip and then go up and dip and go back up. And like I said, a lot of these oil companies' stock, their valuation is directly tied to the price of oil. So if you see oil go up a lot in a day and you go look at a list of oil companies, like 90% of them will also be up. And if oil dips a whole bunch for the day, 90% of these oil companies will be down. So it's very predictable. And as long as you pick a couple companies that and you like and you've worked with, then you can, when I say I mean on a fundamental level of are they profitable or are they not profitable, and is their management eventually going to make money or not. So if you just pick a couple companies that you like, then it could work out well for you, like it has for me. So a good example would be Whiting Petroleum. They're a company with most of their assets out of the Bakken, and Oasis Petroleum, they're also out of the Bakken. They have similar market caps. I've been very bullish on both of them since I think I originally bought in March. And let's see, I'll tell you what I'm up right now. So on Oasis, I originally bought in at $57 a share, and now the shares are trading today at $98, which I believe is pretty close to an all-time high. I think it hit its all-time high today at 99. Yeah, it went up to 99.11 today. Or let's actually look at the real. Let's see, 99.10, 99.17. Yeah, so it went almost all the way up to $100 today, and now it's at 98. But yeah, so Oasis I bought at 57, and I'm up 71% since March. And then let's see, Whiting Petroleum I bought in at $33.22. It's at 51.17 right now, and I'm up 54% on that one. I bought Continental, which I am not quite as bullish on. I believe they have a bunch of debt. I don't know as much about these guys. I was on their last earning call. I believe their CEO is Harold Hamm. He's kind of a cool guy. If you look at his history, he has kind of an interesting life. I I think he's kind of funny looking, and I don't know why, but it's a little bit endearing. So I bought some shares in his company. I bought shares in Energy Transfer, which is a pipeline company. They're the ones that own the Dakota Access pipeline that is, they're trying to shut down right now. That's also like a really important factor in the Bakken. When that was ordered to be shut down, all the stocks for companies operating mainly out of the Bakken just completely plummeted, just overnight plummeted. And then when they announced that they were going to continue until there was a ruling, and it went to a higher court, that all the stocks went back up again. And then recently, like a month ago, it was in court to decide whether they're going to shut it down while they're conducting the environmental study to decide whether they're going to shut down the pipeline. And all the stocks went down like crazy again. And then a couple days later, once the judge ruled that yes, it would be able to continue to operate, all the Bakken stocks went clear back up. And that's actually when I lost out on those crazy gains, and I almost made all that money, but I sold a couple days early because I didn't understand what was going on with the pipeline. I just knew the stock was going down, and the company was clearly undervalued. So I bought up calls like crazy, and then but I couldn't figure out why it was staying down. I got kind of spooked and sold early. That was kind of a mistake, but that's just what happens when you can't figure out, why a stock's going down, which is probably not the smartest move in the world to buy stuff when it's going down and you don't know why it's going down. But I figured it had something to do with the price of oil, because all the oil companies went down a little bit. And then, Oasis was down real bad, so I bought Oasis, and then all the other oil companies went up, and Oasis continued to go down, so I doubled down on it, and then it just stayed down for 4 days, and I was like, okay, this is actually a little bit dicey. I need to get out as soon as possible. So as soon as I doubled my money, I sold, not knowing that the reason it was down was because of the Dakota Access Pipeline. I wasn't finding any news directly correlating with Oasis to it, and I didn't think about the pipeline, and I didn't think about what was going on with it. But live and learn, and hey, I didn't lose money on it. I just didn't gain as much money as I could have. But pretty much I've been buying these oil companies, and then since everything okay, so back to Oasis and Whiting, these two specific examples, what I like about them is that I didn't like them in 2020 because I was actually working for Whiting. I was hauling water off their wells in 2020, and they filed Chapter 11 bankruptcy, and they screwed me out of money. They didn't pay me. They filed bankruptcy while they owed me money, and to this day I haven't even been paid a big chunk of it, and which kind of sucks. But the upside to their company going bankrupt is that they were able to basically get a lot of their debt canceled or forgiven, or whatever happens during bankruptcy. All their debt just evaporated, and a bunch of shares traded hands. But now they're a shale company, and oil is doing crazy good, and shale's doing crazy good, and they have zero debt, and they just have nothing but money coming in at this point, and they're all kind of taking it easy on drilling, so they're not going into crazy debt to continue to pump no matter what and drill no matter what. They're actually showing restraint, and just from a money perspective, these companies are doing better than ever. They're kicking ass. They have, with the price of oil going up, they have so much upside potential, and they've just been, branded as these shitty companies, which they, I kind of have a love-hate relationship with them, because, hey, they screwed me out of money when they went bankrupt as a contractor hauling water for them. So and also, there's all the environmentalists saying that they're polluting the earth, and they need to stop drilling and go out of business, and they hate the pipelines, and they hate all the shit. But just from a purely money perspective, these companies are actually kicking ass. So, to me, that's why I've been so interested in investing in them, is because, one, their stock prices typically directly correlate with oil, And so when oil goes down, the stock prices go down, and then you just buy some calls at the bottom, and then the oil price goes up a little bit, and then your calls double in money, and then you sell them. And it's just a really easy, pretty straightforward way of making money, is just by flipping calls for oil companies. You can obviously get involved with the underlying asset, which would be oil itself, and try and flip oil futures contracts. I've looked into it, and I might get into it at some point. But to me, I feel like it's easier to get behind a specific company in a specific region, like the Bakken, because like I say, I'm from that area, I understand it, and I know these companies are doing well, versus oil as a whole, just because there's so many worldwide players, and I feel like it's a little bit more risky in my mind, and it's just something I guess I can't really, I don't really feel comfortable doing it as of right now. I feel like it's just a little bit more of a crapshoot. Obviously, if I'd never lived in North Dakota and I was like, from the East Coast or something, I wouldn't be investing in these companies if I'd never seen them, never worked for them, never seen their well sites, never seen their safety protocols, and I didn't know anything about them. I'd feel the same way as I feel about international oil. But I've never been to Saudi Arabia. I've never been to the Middle East. I've never been to Russia. I've never been to China or India or any of these, South. I've never really been anywhere where they produce oil, so I have no idea, what kind of political maneuvers could happen overnight that could completely tank my portfolio. At some point, I am probably going to have to figure out something else to invest in other than oil. And I already obviously have other things going on, just depending on what I'm trying to do, whether I'm like right now, this is just my day trading strategy. This is me, buying and flipping options, which is obviously considered high risk. And I'm not, like I've said, I'm not putting in a ton of money. To me, a big bet in day trading is like anything over $1,000 or $1,500, or the biggest bets I've done is like a $4,000 YOLO into oil options that I've flipped, which obviously $4,000 is a decent chunk of money, but it's also like, hey, I obviously made all that money in the stock market, so if I did lose it, then not the end of the world, and if I doubled or tripled it, then that's a lot of money, So it's enough to be exciting, but not enough to really feel like I'm risking a ton of money, because obviously, hey, I did put my time into making this money and putting the time into the research, and I feel like it's still equal to my time, even if I didn't have to make that money, driving a truck or doing some kind of physical labor. Like, I still put my time into making that money, so it's still equal to a certain amount of my time. But today is the day where I stare at the market, watch it go up and down, decide based off past trends and the general news cycle, whether or not I think these calls have any more upside potential, or if I'm going to be losing my gains. So far, I'm up today. I'm down actually from my all-time high, but at one point today I was up $3,500. Now I'm only up 26. So I already lost $1,000 worth of gains by not selling at the top, but hey, I have no idea where the top is. So it's real hard to say, but so I probably have, all in all, probably like $10,000 worth of calls that are expiring at the end of the week that I need to figure out a good selling point for them. When I said I don't feel like this time's that valuable, like it's not that well spent, I guess what I mean by that is, all the time I put, if I put a solid day into just watching the news and watching the stock go up and down, what I really get out of it long term is just the money I made, selling at the right point. Whereas I feel like the days I spend a lot of time, reading books and learning technical analysis and learning different things about the stock market in general are more long-term investments. They're compounding. Like, the more I learn in general about the oil industry as a whole, and the more time I learn about the the stock market and the investing world and the money world as a whole, it's they're long-term compounding ideas that make me I guess that make a compound return down the road, because it'll better set me up to make more money in the long term. So I don't really look at this investing hobby as, I guess, a get rich quick scheme. I look at it as like, hey, I'm going to be investing for the rest of my life. It's something I really enjoy quite a bit, and I feel like, if I miss out on some money, because I didn't get in on the latest, Reddit pump and dump, and holy shit, I could have been a millionaire or whatever. I don't get too caught up in that. In my mind, I'm like, hey, if I continue to do what I'm doing, which has been real slow and steady, I haven't made crazy gains. I think overall, my portfolio, I'll check it right now. My portfolio since January is up a total of 167%. So right now I have $21,300 total in my day trading account. I'm almost at that 25,000 mark. Then I can do actual day trading. But yeah, I'm up 167%, which from a traditional investing standpoint is amazing. It's unbelievable. People, 167%. That's like 16 years for some people worth of investing. If you're making like a 10% return. For people on Reddit, people easily sometimes will, you'll see screenshots of people up 10,000% or more than that, just crazy amounts. But obviously those are kind of few and far between, and you have to time it perfectly, and they typically involve massive amounts of leveraged risk. Whereas the way I prefer to do it is, hey, buy a couple $1,000s worth of oil calls on companies you believe in, that you have a pretty good thesis for. Sometimes they go up 30% and I sell them. Sometimes they go up 200% and I sell them. But overall, it's just kind of been slow and steady wins the race for me. I haven't made like a crazy amount of money, but I also haven't lost a crazy amount of money. And, I'm not getting like stomach ulcers feeling like I'm gambling this massive amount of cash every single day. So I enjoy it quite a bit. It works out for me great. I believe in oil as a whole. I believe in all the companies as a whole I invest in, although some of them, like some of these Makin shell drilling companies, like I think long term, like 5 years down the road, I probably won't be invested in them, which I don't have a problem with. I think in the short term, I deserve to make money off these fuckers because when they went bankrupt, they did screw over a bunch of people that pretty much, it's not like, so here's kind of the investing, the bankruptcy thing. We were working for this company, Whiting, in March of 2020, and I think they owed me something like 60 grand for work I'd done for them, 50 or 60 grand. And then they went bankrupt, and it was like, oh, we may pay you, we may not pay you. And they basically released a statement saying, hey, we're in Chapter 11 bankruptcy officially. All of our previous debts to vendors and suppliers from the past, they might get paid, but we're not under any legal obligation to do so. But any work you do from here on out for us is 100% guaranteed based on, bankruptcy law and whatever else. So basically it put us in this situation where it's like, hey, we owe you, these people owe us a bunch of money. They went bankrupt owing us a bunch of money, and you have no guarantee that you'll ever get paid, but if you keep working for them, then they'll for sure pay everything you do from here on out. And it was a real shitty position for me because I was already kind of at the bottom of my cash reserves, and they hadn't paid me in a while, and I had a driver, and I just barely bought some new equipment that I needed to get paid for, and I was pretty much to the point where I was like, I need to get a check like in the next 2 weeks, or I literally am not going to be able to run my company anymore. And it sucked. It was a shitty position to be in, and I had to tell my driver, I'm like, hey dude, look at, I don't have enough money to pay you. I have enough money to pay you everything you've done so far, but basically I don't have enough money to keep writing you checks every week. So I actually told him, I was like, look at, you have two options. You can either I said basically, hey, I'll pay you out everything I owe you to date right now. I'll do it right here, right now. But but I can't basically guarantee I'm going to be able to pay you in the future until I get paid, basically. So I'm like, you can work for me, but if you work for me, then I'm not going to pay you till I get paid. And if you don't want to work for me, then no hard feelings. Go on and kind of do something else, and hopefully once I get paid, I can hire you back. And he ended up just working for me, and they ended up paying us in a timely manner for the work we did from like post bankruptcy. But all that money pre-bankruptcy, they paid us out. That it took them like 4, 5, 6 months. It was way later down the road, and they paid us in chunks here and there. And then the last chunk of money, I think they only paid us like 75% of what they owed us, so they still owe me like 16 grand. And that last 16 grand I'll probably never see. But hey, it is what it is. But I ended up paying my driver, obviously, everything that I owed him as quick as I could, and he was cool about it, and he's a good buddy of mine. And I ended up helping him out getting his own truck later on, so I had a great relationship with him. But in a nutshell, these companies, I think long term, I wouldn't bet a whole ton on Shell. They fell the hardest during the pandemic, and now they're rising up the fastest. So in my mind, like, hey, these guys fell during the pandemic. They kind of took me down with them. Like, I had a real hard time surviving because they didn't pay me directly for the work I did for them. And like, to me, it only makes sense that I profit off them coming back up. And they will come back up. And what they do long term, I don't know. It's actually kind of an interesting situation where I believe in these companies, and in a way I kind of like them, and I'm rooting for them because I have money invested in them. But at some point I do plan on pulling out because oil isn't going to be good long term. It's only going to be good for, who knows how long. Could be year and a half, 2 years, 5 years, 10 years, 15 years. I don't think anyone knows. But at some point oil is going to obviously be phased out quite a bit, and all these companies are either going to have to switch over to something else or become worthless. So I don't look at this as like a 10-year buy and hold. I look at this as like a hey, I'm making money off these, probably for the next year and a half. Kind of just analyze it, and when I feel like they've hit a pretty good peak, then I'll just sell and probably never look back on some of these companies. But for the time being, I'll probably even end up going back to work for these guys. And I don't know, I guess I probably shouldn't take it too personal that they didn't pay me, because I'm sure some of it's outside of their control. When you go into bankruptcy, I don't know what the actual laws are. But I guess the way I see it, it's like, hey, I'm a truck driver. I make money doing an actual service for a company. So if you go bankrupt as a company, I think the people that are providing you supplies and materials and direct services should get paid first. The investors, the shareholders, the bankers that gave the loans out, they're the ones I think that should get the short end of the stick, because they're already gambling to begin with. Like, when a banker gives out a loan, the banker's job is to give loans to people that can pay them back. When investors invest money, their job as investors is to make smart decisions into the companies they're investing in to make sure they actually get a return down the road. And so if they don't get their return because the company fucked up and it it overextended itself, and I'm not saying that these companies even necessarily fucked up on purpose, because no one could predict negative oil. Like, that's a fucking hard thing for anybody. But at the end of the day, the investors are in the job of investing and making these decisions based upon their due diligence, and the banks are in the business of giving loans based on their due diligence. And if the company fails, the way I see it, if the company fails and the people that put forward the money get screwed, I feel like it's kind of they should be the ones to get screwed, because it was their job to make sure they didn't. You know what I mean? In the sense that, like, me as a service provider, it's not my job to make sure that these oil companies are going to be viable down the road. Like, I do a job, I haul water, and I go home and I collect checks for doing a direct service for these companies, and I feel like the service provider should get paid like like, I don't know the bankruptcy laws and stuff, but to me it just felt real shitty. It just felt like, okay, these banks are going to get bailed out, and these banks are going to get their money, and they're going to get all their shit, but the guys that are actually doing the work to run the fucking, to basically make the oil production possible, got the short end of the stick. And I guess for that reason I'll never really feel like oh my god, I love Whiting and Oasis Petroleum so much. And I obviously didn't screwed over by Oasis, but one of my buddies did. He was working for Oasis, and he lost money when they went bankrupt. And every time these companies go bankrupt, they end up screwing the little guys at the bottom that are actually doing the work. They're not sitting there, you know, pushing numbers back and forth and flipping calls, and they're not doing any of that. They're not speculators. They're just hardworking people that go out there and they work all day every day, and they put in the hours, and they do services, and they should get paid and go home. And the people that want to speculate on the market and loan money, they need to be good at their jobs and realize that the reason they just get to sit around and you know, flip numbers around all day and make a living off of it is because they're providing a service, but it's their job to make sure they're doing a good job providing that service, and they're making sure they're not giving money to the wrong people. So I guess that's just my 2 cents in the matter. And at the end of the day, it's not like I'm still so bitter or anything. It just, but to me, I feel like if I lost all my money in the market, like I say, I have, you know, 21 grand, and I made 10, 11, 12, $13,000 in the market. If I have 21 grand in the market basically, and if I lost it all because I invest into the wrong thing, unless that thing was just openly a fraud, it was openly a scam, which there are open frauds and scams out there, you know what I mean, in the Security and Exchange Commission obviously try and protect against them. But if I, as an investor, went and invested a bunch of money into a company that I didn't know anything about, and I lost my shirt on it, I'm not going to go and complain on social media and say, oh my god, they screwed me over, I lost all this money, I believed in it. Unless they're obviously there's blatant lies and deception and fraud and scam in the stock market like crazy, but at the end of the day, that's the risk I take as an investor. So if I lost it all in the market tomorrow, I'd obviously be bummed out, and I'm sure I'd be, you know, bitching about it and you know, telling the story and stuff, but it's not like I would feel like I was wronged directly by anybody, unless it was like deliberate, blatant fraud. But in terms of, you know, getting screwed out of money because you're just doing your job and you're a trucker, and, you know, you're not even following this company's politics and fucking investments, and you're not even made privy to that kind of stuff. It's not like I go to these, you know, I'm not like I'm invited to these company board meetings and they're saying, hey bro, you know, we could potentially go bankrupt and here's the risk. Like, nobody tells you the risk. That you just say, hey, go drive for us and we'll pay you, and oh well, wait, never mind, we can't pay you, and oh, you want to do something about it? Well, you can't, so go fuck yourself. You know, we don't legally have to do anything for you at this point. We just got all this service for free, and you had to pay money for it, and it's shitty all the way around. I don't know if there's legal recourse out there, but I don't really care. I'm kind of a live and let live person. At the end of the day, if I can just make some money flipping oil shares on these people's companies, I'll feel good about it. And I'm pretty much there. I'm pretty much made all my money back, and the more money I make, the more money I'll have to gamble. So I'm sure that I'll make bigger gains at some point. I'm probably gonna hit the lottery and make a $16,000 bet that you know, I'll probably make a large bet that ends up with a $16,000 in one day profit, and I'll just look at that as breaking even on what they screwed me out of in the oil field, and it'll all be good. But I'm sure there's a lot of other people out there that have been screwed over that pretty much just had to bite the bullet and say, fuck, what do? I can either keep going the best I can and just live with it, or be bitter for life, but there's nothing they can do about it at the end of the day, other than just, you know, try and pick up the pieces and move on. But anyways, that's pretty much the end of that for the day. I'm gonna figure out when to sell these damn stocks. They're going down right now. I'm already down like freaking another $200 since I first was telling the numbers. But I'm still up $2,500 on the day, I guess. I'll probably hold them. Sell them like Tuesday or Wednesday or something. I'm sure these companies are still going to go up a little bit, just because there's so many calls expiring on the 18th. There's going to be some massive price movements before then. But I'll keep you guys updated. Thanks for listening. If you listen to the end, drop a comment and let me know what you think. If you have any suggestions, if you have any questions about anything so far that I've talked about. I know, so I was listening to some of my previous recordings. I know I tend to jump around a little bit. I'll go off on like a tangent to like try and provide some background information, but I decided I'd rather just make these and do as little editing as possible, because I guess for me right now it's kind of quantity over quality. I'd like to do both, but editing's kind of hard for me, and I feel like I tend to procrastinate it, and things never get done if I try and edit the shit out of them. So I just kind of record raw and do bare editing and put it out there, and I'm sure it'll get better over time. But thanks a lot.